Hey everyone, welcome to Launch Investing. In this video, I am going to revisit one of my favorite stocks, TAV Airports, which is the #1 airport operator in Turkey and also operates 15 airports in 8 countries. I first talked about TAV Airports around 6 months ago, after the legendary investor Mohnish Pabrai bought a 5% stake in the company. That was actually my first video on this channel, so if you haven't watched it yet, I recommend you to check it out. In that video, I explained why I think TAV Airports is a great business with great moats and a huge growth potential. Now, more than half a year later, I wanted to update you on how the company is doing and what to expect for 2023 and beyond. So, to quickly recap, TAV is an airport operator based in Turkey that runs 15 airports in 8 countries. They also provide services to other airports, reaching 108 airports in 29 countries. So even though they are a Turkish company, they have a global presence and most of their contracts from their Turkish airports are denominated in dollars or in euros. By the way, if you like this type of content, please leave a like and subscribe. It means a lot. And finally, their biggest shareholder is a French-based company, Group ADP, with 46% ownership. Another notable shareholder is Mohnish Pabrai, as I just said. Now, let's hear what Pabrai has to say about the company, and you can also find the link to his full speech in the description below.
And I'm going to Kazakhstan because there's a airport operator in Turkey. They operate 15 airports in 8 countries. And 3% of airports in the world are privately operated. 97% are operated by the governments and municipalities and so on. And that 3% will grow because it's a no-brainer actually to give it to a private operator. So they, during the pandemic, they did a deal in Kazakhstan when there were no flights in 2020, 2021, where they bought the Almaty Airport, which is the #1 airport in Kazakhstan, for 400 million. And actually, most of these airport deals are BOT. You get them for 30, 40 years. This is forever. It's an outright purchase. And they're putting in about 200 million of capex, so we have 600 million. And I think in a few years, they'll be making about 200 million a year on it. And so that asset is a tremendous asset. But there's 14 other assets, and it trades in Turkey. So that's awesome. And a bunch of these airports are not in Turkey. And the interesting thing about TAV, the airport company, is even the airports in Turkey, all their revenue is in euros. All their revenue in all the airports is in euros. So the lira devaluation is irrelevant. And even with the warehouse operator, they have cement and steel and land, which is automatically inflation indexed. So again, the inflation rate doesn't matter there because it just adjusts. So that's what I did. In Turkey, I just looked at investments where inflation becomes a tailwind, not a headwind. And then I just have the people I'm buying the stock from. Like Buffett says, it's like playing bridge with people who've been told it does no good to look at the cards. And that's the way it is. So that's what I do. Basically, I look for anomalies and just have to be patient. The #1 skill is patience and let the game come to you. It's not so much per month of this and that. It's whatever you sell, 40% is coming to me. So the $100 bottle, $40 goes to the airport operator. And then now we're left with $60. Then $25 or $30 is the cost of the bottle. And $10, $15, $20 is the cost to run the shop. And then the company operating the shop makes like $10 or something. So the airport operator, basically what happens, it's like lambs to the slaughter. So when an aircraft comes in, 150 or 200 people in the aircraft, let's say 150 people. On a per passenger basis, so that airplane will end up with duty-free sales for all 150 people together of about $1,500. So one airplane will bring in about $1,500 of top-line revenue, which means that the airport operator gets about $600 for each airplane that's coming in just on the duty-free. And when these concessions are given to these airport operators, the government, which gives a concession, will set the per passenger fee. So they give the airport operator. So when this airplane comes in, the 1,500, the 150%, if it's an international flight, it's about $15 to $20 per passenger. So about like $3,000 or something per airplane coming in as their fee. The duty-free portion is not regulated. So they just give them. So the duty free is whatever you can charge, whatever you want, make whatever you want, do whatever you want. Same with food and beverage, not really regulated too much. So there's some parts of the business that are regulated, like this per passenger fee and so on, but some parts that aren't. And so it's a kind of a blend of all of that. And what was interesting about the Kazakhstan one that they got was that they, like I said, they didn't have a BOT, they owned it outright. And Kazakhstan was the only airport they got where they actually have the fueling. Normally the airport operator doesn't deal with stuff on the runway and all that and on the ground. So fueling that's the biggest piece of the pie for them. And Kazakhstan is landlocked, so everything has to come either by land or air. So anyway, so that's the economics of that business. The difficulties in that business are that you can get animal spirits. So when there's a new airport being announced to be privatized, then there are multiple people who want to get those duty-free streams and all that. And the danger is that they get overbid. So if they overbid, then you end up with a situation where you pay too much for the concession, and then it doesn't quite work out. And but one of the things that I think TAV Airports has going for it is that the geographies they operate in does not attract a lot of the big boys. So, like when they were doing the Kazakhstan deal, nobody wanted to do the deal, especially in 2020 and 2021. Nobody wanted to buy an airport when there's no traffic. So anyway, I really enjoyed in that particular case. I knew the airport business generally had good economics, but then when I studied it, it was a lot of fun to study. And so now I think we own about 5 or 6%. So every 20th bottle of Johnny Walker is for the benefit of my investors. So it should be good.
So, as we can see, Mohnish is incredibly bullish on Almaty Airport, which is one of the TAV Airport's crown jewels along with Antalya Airport. In 2022, Almaty brought in 333 million euros in revenue, and also they had around 20% profit margin as well. But their 200 million euros of capex is still on construction level. By the time the capex is completed in 2 years and assuming a full recovery from COVID and a return to growth, I estimate that Almaty will generate around 700 million euros in revenue and have a 20% profit margin. This margin could be even higher, as some of their airports have margins around 30%. So I expect Almaty to contribute around 150 million euros in profit per year by 2025 to 2026. And don't forget, TAV Airports has a market cap of only $1.5 billion right now. So if the euro-dollar exchange rate stays the same, they will be earning $165 million just from Almaty in 2 to 3 years, while the entire company is valued at $1.5 billion. Before COVID, they made a profit of 373 million euros. But that might not be a fair comparison, because they had Istanbul Atatürk Airport in their portfolio back then. However, they didn't have Almaty, which can bring similar results. According to their CEO's message, they expect to grow their EBITDA by 12 to 18% until 2025. Which is when most of their capital expenditures will be done. He also mentions the investments in Almaty, Antalya and Ankara, which he expects to complete in 3 years. And I actually spent some time calculating a bear case for Ankara Airport. But finishing the message, the CEO also says that Turkish revenue now only comprises 37% of their consolidated revenue, whereas in 2019 that number was 57%. They also secured a new 27-year concession deal for Ankara Airport, which is the capital of Turkey. They will pay 560 million euros, including tax, for this deal. Ankara Airport had a passenger growth of 6 to 7% in the 2010s, which was a tough decade for the Turkish economy. The airport's revenue was 54 million euros in 2018, 64 million in 2019, and 29 million in 2022, as they are still recovering from COVID. I assumed a starting revenue of 50 million euros for 2023, and then a 6% annual growth with a 30% jump in 2025, when their 210 million euros capital expenditures will be finished. Based on these numbers, I calculated a profit of 835 million euros and a cost of 770 million euros. I honestly think this is a bear case for the airport, and even then, their return will be positive in my opinion. Another important development is that they extended their concession period for Antalya Airport, which is the most popular tourist destination in Turkey for the summer season. They will operate it until 2051. I have highlighted the key points from their presentation here, so feel free to pause the video and read them yourself. Before closing, I want to focus on the big picture for TAV Airports. They doubled their revenue from the year before to more than €1 billion. I think this year they will finally surpass their pre-COVID passenger numbers, excluding Atatürk airports. This actually started from last year, but their average concession duration is now 30 years. years, which is incredibly important. Since their concession duration is now so long, once they end their capex cycle, I think we can see them start paying huge dividends again. Now, you may wonder how all this capex has affected their balance sheet. Well, I think they have a solid balance sheet. Their current assets exceed their current liabilities, and they generate strong cash flows every year from their airports. And they also manage their debt very well. 78% of their loans have fixed rates, which protects them from rising interest rates that the Fed is using to curb inflation. Moreover, their debt has a long average maturity of 4.6 years and a reasonable average cost of 5.7%. However, they still have a high level of debt. Their net debt is 1.6 billion euros, while their EBITDA was only 322 million euros last year. This gives them a net debt to EBITDA ratio of almost 5, which is quite risky. I would prefer it to be below 3, but we have to consider the fact that they expect their EBITDA growth for the next 2 years to be between 12 and 18%. And after that, their capex cycle will be over, and they will enjoy huge cash flows that will boost their EBITDA even more. This is based on their 2022 guidance, which they usually exceed. So I think TAV's management is following the right strategy of under-promising and over-delivering. Another thing to note about TAV's business is that it has a high operating leverage. This means that as passenger volume grows, cash OPEX grows at a slower rate. You can see this in their pre-COVID performance, when they had Atatürk Airport and their EBITDA margin was above 40% for 6 consecutive years. You may still have some doubts about TAV being a Turkish company and facing high inflation, but if you look at their revenue breakdown, you will see that only 12% of their revenue is not linked to inflation. So they have a very good hedge against inflation. Lastly, I want to point out the corporate governance rating in Turkey, where TAV Airports excels once again with a score of 96. They used to be third best company in Turkey with a lower score of around 92 to 94 a few years ago. Right now, they are the 7th best company, but that's because other companies have improved their scores even more. This is a good indication for Turkey's overall progress. So that was it for today. I hope you liked it. If you did, please leave a like and subscribe. Other than that, I'll see you in the next one.